introductions. Today, the vision has turned in a giant global business in more than 130 countries around the world. The famous brand name Panasonic is easily recognized, but behind these popular household names and the extensive range of consumer durables that carry its label stands its manufacturer, the foundation of the brand's success. Panasonic Manufacturing Malaysia Berhad PMMA. The PMMA story in Malaysia is an inspirational on remarkable and reflected in its string of proud achievements that has successfully spanned 2 decades. Being the first plant to manufacture household electrical appliances in Malaysia, the company confidently took on its parent company in Japan. Throughout the year, the corporation has observed swift progress from its humble start as a producer of dry cell battery to Malaysia's leading manufacturer of sophisticated electrical appliances. Today, the company brand's name has emerged as one of the most welcome and trusted brand name for electrical home appliances chosen by most Malaysian households. At Panasonic, we manufacture, operate, deliver, and maintain a series of product range with globally competitive models under the Panasonic brand's names to the markets, incorporating new features, enhance capability, and improve quality and equality importance by our excellence after-sales service.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Syahri Najib bin Muhammad Syukur. So I'm going to discuss about the analysis ratio, which is current ratio, total asset turnover, and gross profit margin ratio in 5 years, which is 2017 until 2019 for Panasonic company. Firstly, the current ratio. The current ratio is a liquidity ratio that measures whether a firm has enough resources to meet its short-term obligation. According to the graph, it increased from 2017 to 2020, which is from 4.19 times to 4.53 times. However, it dropped to 4.36 in 2021. This indicates that the company is unlikely to be able to pay its financial obligation before the expiration date, which means the company is not in good financial condition. Secondly, total asset turnover is a financial ratio that measures the efficiency of the company's use of its asset in generating sales revenue or sale income. In 2017, 1.31 times decreased to 1.12 times in 2018. In 2019, it increased to 1.13. However, it continued to decline to 1.00 times in 2021. Overall, the company showed a weakness in using assets to generate sales in 5 years. Next, the gross profit margin. Gross profit margin is the percentage of sale revenue that a company is able to convert into a gross profit. According to this analysis, show that 20% in 2017 and dropped to 18% in 2019. It decreased to 19% in years 2020. However, it decreased again to 12% in 2021. This shows that the company inefficiency generate gross profit from their sale of product or service.
Assalamualaikum. My name is Siti Rahma binti Abdul Salim. I will continue the next presentation about day on inventory, net profit margins and operating profit margins. Next is day on inventory. Day on inventory equal to inventory divide cash of goods sold and multiply to 365. In 2017, Panasonic Company obtained 20.41 days for the analysis of the ratio in the inventory. This was good result at the beginning of the inventory storage in the year before it was sold. In the following year, 2018, there was a deadline in inventory storage, resulting in a decrease to 19.21 days per year. However, there has been a consistent improvement from 2019 to 2021. The analysis in 2019 record 90.68 days and increased to 31.34 days in 2020 and continue to increase to 32.07 in the following years. This is because the company has efficiency in storing inventory before selling it. Overall, the company is able to tie the number of days of funds in inventory. Net profit margins. Net profit margin equal to net profits divide sales. Based on the table, the net profit margin record the same profits in 2017, 2018 and 2020, that is 11%. However, the analysis show a decrease in 2019. It is 9%, which was the lowest net profit margin. This was due to the reduced sales process during the year. However, the company was able to stabilize revenue efficiency management by maximizing sales to 12%, which is the highest net profit margin ratio for the following 5 years. Overall, the company experienced less impressive sales years on years. Next is operating profit margins. Operating profit margin equal to operating profits before tax divide sales. Based on the tables, in 2017, the operating profit margin is 0.14 times and it still remains until 2018. However, in 2019, the ratio decreased to 0.12 respectively. It indicates that the Panasonic has a problem in their operations, but in 2020, the operating profit margin increased to 0.30 times and also increased in 2021, which is 0.40 times. It shows that the company has already taken corrective actions to recover its productions. In conclusion, Panasonic has experienced a decent of operating profit margin and has already fixed the problems.
Hi, my name is Rizal Zuhaika Anak Laki Ramli and my metric number was 2021471338. Okay, in this slide I'm going to showing the present about debt to equity ratio that has been collected by our groups, the data. Okay, before I proceed with the data that as we collected, let me explain what the meaning of debt to equity ratio. Okay, this ratio is indicating the relative proportion of shareholders' equity to finance company assets. How we can get the amount of ratio? Okay, first we have to get the total liabilities and divide by common stock equity, that we can get the answer. Okay, let me start with 2070. The data generated is 3.65%, and the amount is increased to the next years, which is 3.71, and the amount decreased the next years, which is 3.49, and also decreased the next years in 2020, which is 2.91. However, when they maintain the decrease, the ratio increase in the next years, which is in 2021, which is 2.30. Okay, overall, for the equity to for the debt to equity among 5 years that I explained before this, that show this company, Panasonic company, as take a risk, because if the amount they get, the percentage they got one more one and more, it show that their company has a problem with their system. If they get one or one and above, it show their ratio as a efficient, there is a efficient system. So that show they have a big number of debt to make finance for their company assets. Okay, in this slide I'm going to explain about the other ratio, which is operating returns on assets. Okay, what the meaning of the operating return on asset ratio? It is meaning of a measure of operating income that is generated for every dollar invested in its assets. Okay, based on the data that we can see in this slide, okay, the data show the fluctuates from 2070 until 2021, which is they only got that we can make we can make inference that this ratio is going unwell for this company, which is they get the show is fluctuated among from 5 years. Okay, that's mean every investment per dollar that they make, they invest in fixed, they only got at least 12% for profits. Okay, we meet again in the other slide. Okay, in the last slide that I'm going to explain is fixed asset turnover. Okay, like before this, I'm going to explain what the meaning of fixed asset turnover. Okay, in general, this ratio is used by analysts to measure operating performance. This efficiency ratio compare net sales to fixed asset and measure a company to ability to generate profit by using the fixed asset that has investments. Okay, like we can, as we can see at this slide. Okay, first performing that show their data has a well data, but after the next 4 years their data show the decrease. So that what I can make a inference by this data that has been collected. Overall, the company invests in current asset but does not make the maximum profit for maximum profit for 5 years. Okay, that is all. Thank you from me.